Hello and welcome to the Digital Assets Report. I'm Jane King at the New York Stock Exchange. With me today again, Vince Molinari, CEO of Liquid M Capital.
Hey, Jane.
So great to talk to you today about what you see in 2018 for digital assets. So let's start with regulation. That's been a big thing in 2017. Where do you see that going this year?
Yeah, and thanks, Jane. Chris Pilata, my partner, who's the CEO of Templum, and I put these predictions together to really think about where the marketplace is going in 2018 across the spectrum of digital assets. And I think when we touch on regulation, many people are looking for the SEC to continue with enforcement. We think it's going to be a lot broader than just against the issuers that may have conducted ICOs that weren't in compliance with the securities laws. We think it's going to scale pretty significantly to perhaps even some of the de facto exchanges that are trading crypto assets that inadvertently, perhaps, have traded utility tokens that are now deemed to be securities, so they may have some trouble. And I think another big area that we're going to see happening is the unregulated entities that are conducting themselves as investment banks or capital advisory firms that are taking securities-based compensation that are going to continue to be looked at.
So you think, SEC, CFTC, FINRA, I think they're all going to kind of collaborate and come up, because the ICO market just kind of came out of nowhere, it seems like, in 2017, and they were almost taken a little bit by surprise by it. And now there's need for regulation. And
well, I think it's the recognition of the beauty of what the technology brings in smart contracts and blockchain and the ability to aggregate capital in new and innovative ways that all the regulators want to see to continue. I think what's taken everybody by surprise is the size and the scope, and perhaps like anything else, when you have flows of capital like that, some bad actors enter, so you have to reset the marketplace. We might be a bit of the outliers, but we think we're really going to see the regulators start to collaborate together, particularly the SEC and CFTC, very similar to how the SEC and NASA work together on Reg A Plus of the Jobs Act, creating Title I and Tier 1 and Tier 2. So we think there's going to be a lot more collaboration, and even FINRA perhaps stepping in the space as well.
Okay, so an increased collaboration between the blockchain crypto community and the regulated entities.
Yeah, so I think this is really about collaboration. I think as the early days of ICOs have demonstrated, there's a tremendous appetite and a great ability to use cryptography to aggregate capital. But I think what we're learning now, that was the early innings, first phase, almost an MVP type product. Now I think you're going to see a combination of the regulated firms who are issuing pursuant to securities work with those very organizations to take the best of both worlds to really greatly expand the marketplace and give investor protection.
Yeah, I mean, it makes sense. There's a lot of knowledge kind of scattered about. If everybody can come together and come up with a good solution for everybody. So this is a viable, trustable financial asset.
No question about it, and only going to grow a lot more, we believe. Okay,
so this is interesting. The term ICO may be replaced. Got another term I have to learn?
Yeah, so we're looking at tokenized asset offerings, or TAO.
TAO. That's, some good karma there.
Yeah, we think so. And I think part of the problem is going to be as enforcement comes down, as we're seeing more class action lawsuits against companies that issued ICOs improperly, probably going to get a black eye on the term ICO. So I think as Liquid M Capital and Templum are really focused on security-based digital assets, looking to change the paradigm with the name and really identify the marketplace differently.
Okay, interesting. Kind of a rebranding to the whole thing.
100%.
Yep. Early days, a move to market infrastructure creations. What do you mean by that exactly?
Well, I think what we're seeing is great acceptance much earlier than we thought, a compression of the timeline of adoption by venture capitalists, institutional players, traditional financial service participants. So all the credit in the world to the early innovators around ICOs. We're seeing a morphing now. So as we have more fiat coming into the system and expanding outside of the crypto community, there's going to be development of the back-end infrastructure, clearing, settlement, transfer agents, custodians, right? And I think that is going to allow much, much, much bigger pools of capital. So we think it's going to dwarf 2017 as big a surprise as 4 billion or 5 billion was in 2017. We think when you engage the securities marketplace, it could be dramatically bigger in 2018.
Okay, market entry by acquisition.
Yeah, that's a cute one. we think, as any new tradable asset class begins to take hold, right? What's different today about digital assets or ICOs? There's margin, right? There's volatility. There's getting to understand it. So that represents profits. So I think as the incumbents, whether they're exchanges, bulge bracket, financial service firms, and even banks, are going to get the joke that this is a long-term trend and tokenization and digital assets are not going away, they're going to have to step in the market. And what's the most logical way is to start to buy up some of the early movers in the space.
And that is a huge change from what we saw in 2017. I mean, we know what Jamie Dimon said, and so.
I think, again, it's taking the best of both worlds, and a little bit of a flashback to 1998, right, in the issuing release of regulation ATS, and the early ECNs, right? Archipelago, Island, Instinet, NextTrade, Lava, all got acquired because they started to take market share.
Right.
So I think even as the ATSs go, that may be a trend. Whoever establishes custodianship and transfer agent will also be acquisition targets. So we think that's the entry point.
Okay, and also the year of women, so you see women playing a bigger role in ICOs and the whole digital asset space.
Well, so there's a lot to prediction number 5.
Okay.
Fifth element, fifth dimension, SDG number 5, the Sustainable Development Goals. So a good friend, Marianne Schnall, has really propagated that storyboarding going forward of Year of the Women, and lots of coverage in CNN. And we really looked at it part and parcel in that manner, but the level setter for women, women-owned businesses, access to capital is the blockchain, is smart contracts. And if we look statistically, the real shame here is 60 to 70%, depending upon what statistics you want to look at, of businesses in the United States are owned or managed by women, and they're only accessing 12% of the available capital.
Okay,
so tremendous implementation shortfall. If you get even lower in those percentages, when you look at minority women, it's 2 or 3%. So we have some of the greatest minds around the world and brain trust of women that aren't getting access to capital, creating financial independence, and really we don't know where that next genius is, where that next cure for cancer may come from. It could be a village in Africa. It could be a slum in Mumbai. It could be a rural community in the United States, or one of our urban cities here in the US that just aren't getting that access to capital. So we think this is the level setter, or the quantum leap, that is going to be enabled for women to galvanize globally around smart contracts that are creating access to capital and information for women.
So let's dig into that a little bit deeper. So a woman business owner maybe does not have a business that would fit with blockchain. What does she do? Is this mainly for blockchain type businesses, or is this something that would be open to all women?
That is the perfect question. And it exactly, I think as we talk about the early innings, the embryonic stages of blockchain and ICOs, were very largely around blockchain-enabled businesses. But when you move it to the world of securities, we're opening up the spectrum to any fundable company or business in the form of security. Because you still need a business to
scale to get investment money.
It's job creation, it's innovative. Some of the biggest strengths of our country has been around our ability of entrepreneurialism. And maybe this is the beginning of the 5th industrial revolution. And we look at the power of blockchain and smart contracts being that big and transformative.
Sure. And for a woman business owner who has a great idea but has no idea who to talk to or how to implement this or put together an investment deck, is there a good resource for that where she could start?
I think there's going to be more information and data available, but I think if we're talking specifically about women, there are great organizations that are in place that have done a wonderful job of educating, convening. What we're missing is that last mile of connectivity to be able to move the capital to action, whether that's philanthropic or in manners like this that maybe impact investing or pure investment opportunities. So I think it's about that transition, that connectivity to capital, to the idea, and the growth.
This thing, okay, very exciting stuff. So looking forward to 2018. I'm sure it'll be another interesting year, even more so than last year for digital assets.
Incredibly excited.
Okay, thank you, Vince, for being with us again today, CEO of Liquid M Capital, and thank you as well for joining us on the Digital Assets Report. I'm Jane King at the New York Stock Exchange. Have a great day.